AMC is over 9,000. Oh man, what is up, everybody? It's your boy Trey from Trey's Trades. At least I think that's what they call me. Coming back again for another freaking YouTube video. Like the purpose of saying that I'm not a financial advisor, this is not financial advice, obviously, so take what I say with a grain of salt. But let's get into the video. So this has been requested by quite a few people in a bunch of different live streams, a bunch of different videos, that I make a recap video talking about what the AMC squeeze is, what this whole movement embodies, what this all means to the apes, to the hedge funds, to the shorters, to the market makers, to the malpractice and corruption that's taken place over freaking decades and decades and decades. So I'm going to walk you through the process here so that anybody who has any questions about what this AMC movement is, if you're looking to buy, if you're trying to, tell people about the stock, whatever it is, you'll know why the apes are hodling and buying AMC stock the way that they are. So without further ado, let's make this as short as we can and get into the video. So I want to start off here by talking about the history of corruption, right? For decades and decades and decades now, you've seen that the US economy has been built off of corruption and malpractice. And I want to tell you why this is, right? So I think the beginning of when you really see this transition from, I wouldn't say a clean market, but the cleanest market, right, to where we are now, where there's a lot of malpractice and corruption that purposefully takes place, happened when you saw the transition from physical paper tangible shares to the electronic transaction system. Now, the transition to the electronic transaction system was good because it sped up transaction times. So before, it would take 15, 20, 25 minutes to call your broker, right, try and get something organized so that you could get your order filled, whether it was a buy or a sell. But with electronic transactions, you're able to fill your order within seconds on your phone, on your desktop, wherever you want to get that stuff done, right? It speeds up the process, which allows the market makers, the brokers to make more money. It also speeds up the process for us. There's more opportunity for retail investors to make good investment decisions, right? In a perfect world, this makes sense. It's a great opportunity to improve the market system. However, with this sort of speed, with these electronic transactions that take place, you no longer have physical, tangible shares on paper on your hands that you can't really, make up out of thin air, right? So what happened here? We made this transition over to the electronic transaction system. And as of the late 90s, you saw this slow and steady transition into what I would call the malpractice and corruption that has taken place in the market now for decades and decades and decades. And this includes naked shorting, short ladder attacks, which is essentially using algorithms between two different hedge funds, two different groups, two different parties to ladder down stocks and make them just freaking plummet into oblivion, which is terrible, right? If you're not familiar with what naked shorting is the idea that you create something that does not exist. And this was actually a system that was created with the electronic transaction system for the stock market to essentially act as an IOU, right? So in and of itself, naked shorting is not bad. So essentially you just have a market maker, right? Market maker has X amount of shares. Let's just say it's 100 million total shares, right? And they have every single one of these 100 million shares out on loan, but you've got a hedge fund over here. We're just going to call him Hedgie. Hedgie over here says, hey, I would like to borrow 10 million shares. Well, market maker doesn't have that 10 million shares. So what he does instead is he naked shorts, right? He sends out stocks so that this hedge fund can naked short into the stock market 10 million shares, anticipating that the 100 million shares that he lent out, he's going to get some of these back. In fact, about 10 million sometime in the next 1, 2, or 3 days. These 10 million shares would come back to the market maker, right? Hedge over here who has 10 million IOUs in whatever security, whatever stock it is, he essentially destroys these. Boom, they're done. And he sends out the 10 million shares that were sent back by the 100 million to the hedge fund. Then all is said, all the world is good, right? All is said and done. You still have 100 million shares floating in the stock market. However, with this new electronic transaction system, it's very, very easy to malpractice and corrupt the stock market. And what you see happen now, essentially, and this has happened at AMC Stock, which is why people are furious. We're going to get into that more. We're going to get into the numbers of AMC Stock and what happened here in a little bit. But what happens is market makers and the people who are sending out securities to different lenders, essentially, will just continue to send out IOU stock. 10 million here, 10 million here, 10 million here, right? They just continue to send that out over and over and over until you have an inflated float. The free float of a stock essentially is what is available to everybody on the stock market after institutions and the insiders have their cut. So we'll actually use shares outstanding, which is the whole pie. You have an inflated shares outstanding. This could be as high as 150 million. It could be as high as 200, 250, 300, 500. It depends on how many times these market makers, and hedge funds can do this too. They can also naked short stock. right? It depends on how many times they write up these IOUs, right? Now, on top of that, you've also got failure to delivers, but that's a whole different ballpark. Talking about options, we're not going to get into that. But you can think about failure to delivers as a similar process where they fail to deliver on stock, so instead they send out IOUs, and this can also inflate the overall float or shares outstanding on a stock, right? Two different systems that, because of the electronic transaction system, allowed market makers and hedge funds to practice malpractice and corruption and theft in the stock market. Now, what does this do, right? In case you're new, I always assume there is somebody new here. Think about it as simple as the economic law of supply and demand, right? So what we're going to do here is we're going to draw up high and low, high and low. Now, if you've got a lot of supply, and in fact, you're inflating the supply, but the demand is the exact same, what happens, right? So you've got high supply over here, low supply down here, high demand, low demand. Well, if you increase the supply, let's just say that this line right here is 150 million shares, and all of a sudden you shift it over to 500 million. You've got very, very, very high supply, right? What happens is you get a different divergence point to that level of demand, right? Same amount of demand, but a higher supply is going to decrease demand. It lowers stock prices, right? It just creates this synthetic lowered price. It creates synthetic selling pressure, essentially. And this happens because market makers and hedge funds malpractice using naked shorting, failure to delivers, and short laddering attacks, right? So this is the process that has been born out of the electronic transaction system. Now, I don't think the answer necessarily is to get rid of it, because it is a good thing in and of itself, right? The problem is that there's not enough filings, regulations, rules, and policies that govern and regulate these sort of transactions and fraudulent behaviors, right? And this has caused things to happen within AMC. '08 is obviously just an example, but you saw a lot of the same things happen here back in '08. And a lot of the apes that were around for '08, 2008, and had gotten stolen from, were absolutely devastated from the financial crisis of 2008, the real estate market, right? They're pissed. They're freaking mad. And this sort of stuff happened in the late 90s. It happened in '08. And look at this. 2021, almost 13 years later, you've got this buildup of what has happened over the last couple of years with the supplemental leveraging ratio. Essentially, COVID hits, right? COVID hits, and all of a sudden, all these big banks who are bleeding on money are able to lend out more liquidity to hedge funds to essentially go into the market and do what they want to do, right? So now we fast forwarded to 2008, from 2008 to 2021. And what you have is over-leveraged hedge funds because of COVID and quarantine, trying to take advantage of a weaker economy in the stock market and going over leveraged in short stocks. And a way that they make this happen is through what I call collusion. Now, collusion is a strong word, and I absolutely 100% stand by it, because this is what happens, right? So not only do they short the stock with all available shares that they can lend out from these market makers, from lenders, right? Whoever it is, there's a lot of different parties that can make that sort of stuff happen. I'm going to keep it very simple. They also naked short stock. They also fail to deliver on shares that, from options that expire in the money that get exercised, and you need the shares to go over to these options, right? Essentially just add all this together, and what you get is an inflated shares outstanding and an inflated free float. And because of this, they use all these different tactics and then go a step further to collude with major media. You might be asking yourselves a question, and if you're new to the AMC stock movement, you're not familiar with what's happening right now, just go look at the news on Cinemark and go look at the news on AMC, and you'll see a night and day difference, even though the companies are very similar. And this is the thing. The same hedge funds that short AMC stock, that naked short AMC stock, that ladder AMC stock, they're also colluding with media about AMC stock. I can guarantee you this. These same hedge funds that are shorting the stock, naked shorting it, laddering it down, they're paying shills, they're paying bots to spread negativity and BS on Reddit, stock twits, discords, right? I guarantee it, because I've seen these freaking messages all over the place on my own channel, on Discord, on Reddit, on Twitter, all over the place. They're doing this. They're reaching out to media and saying, hey, put out this freaking hit piece at this time. There was a GameStop article that came out like 30 minutes before the stock price actually dropped, saying that GameStop dropped 40%. And where did you know it? 30 minutes later, GameStop price dropped 40%. Now, wow, I wonder how that freaking happened, right? This collusion or idea that you try to scare people out of their money is another tactic that hedge funds use and market makers use to collude and scare people out of their cash, right? Now, why does this all matter? Because fear is a lot easier to sell than greed. People will way over exacerbate fear, right? They'll react much more cleanly and calmly to fear. They'll ride that wave down and sell instantly, because it's easy to freaking sell fear. It's very hard to sell greed, right? So essentially what you get is People get scared. They see these news articles that the media puts out and they settle their positions because why wouldn't you? You're supposed to trust the media. You're supposed to think to yourself, hey, this news article has everybody's best interest in mind, but they don't because the media and the hedge funds and the history of corruption has built up the wealthy. Let me ask you a question. You don't even have to answer because I already know the answer and you should too, right? You might be asking yourself, why would this sort of system exist in the stock market if it's not fair to everybody? And my response to you is this. The stock market is built in the same way that much of the U.S. economy is. And I mean this in the most unpolitical way possible. It's just factual. The thing is, it's built to maintain the wealth and improve the wealth of the rich. It 100% is. Why would they ever want to change their history of corruption that has taken place over the last couple of decades to make themselves more poor? They don't want to do it. They're making money by corrupting. They're making money by naked shorting. They're making money by laddering. They're making money by colluding. They're doing it that way, right? So they don't want to change it. The only thing that is going to change that is retail investors, apes, us, right? The little guys stepping in and saying, look, we've had enough. And that's where AMC comes into the equation, right? So what happened to AMC? A lot of these same tactics are taking place on AMC. Naked shorting, ladder attacks, collusion. I can guarantee you all of these things are happening. And probably the most significant thing is this inflated supply that you've got rocking on AMC. And this is the only thing that I need to show you to know for sure that this is happening. So let me show you this on a 6-month chart, right? Check this out. If you look at AMC on a we'll just look at the daily. January 27th was the most volume that AMC stock has ever seen in a single day. Saw 1.2 billion shares of volume traded, right? 1.2 billion. Now at the time, right, they had a 150 million share free float. What does this mean? It means that this is how many shares are available to trade after institutions and insiders have their cut. So this would mean that this free flow right here would have traded about 8 times over to get 1.2 billion in volume. And that I can guarantee you that is not something that you see on a typical stock in the stock market. That is proof, the only proof that I need to see that there is way more shares circulating on AMC than should presently exist. And this is my proof to you. Let's look at Apple. 86 million in volume. We're just going to take one of the highball days. 150 million in total volume. But get this, right? Their free float is 17 billion. 17 billion and you saw 150 million in volume. So how is it possible that on January 27th, you saw 8 times the free float trade on a single day, right? We're even going to be conservative with our numbers here. Let's just look at the most recent days. Last 4 days, 294 million, 206 million, you had 147 million and 170 million. Now get this, right? The free float right now is about 417 million total shares. We know that retail investors, according to Adam Aaron, retailers own 80% of this free float, 80% at the very least. He said 80% plus. We know that institutions, if you were just to take BlackRock and Vanguard, own about 65 million, but I can guarantee that number is higher. It's probably about 100 million, but we're going to be conservative. If you look at Ortex, right, you can see that the shares on loan right now is 132 million. And then insiders own about 10 million total shares. Now, if you were to do this math here, right, what is 80%? 80% of 417 million. Comes out to 333 million shares. So if you add all of these shares up, right? 333 plus 65 plus 132 plus 10 million comes out to 540 million shares. But we're not even done yet, right? 540 million shares trading on AMC stock. And the apes know this, guys. We've been talking about this for literally months, 5 months easily. 540 million shares is more than the free float by over 100 million shares. But this is where it gets goofy, is on any given day, you're still getting 294 million, 206 million, 147 million, 170 million in total volume. And I guarantee you the volume is going to go much higher than this. So where are they getting these stocks, right? Where are they getting the actual shares for this? I guarantee you it's because the free float, it could likely be in the billions. And I'm not kidding when I say freaking billions. Some people have done math out there that have shown it could be anywhere between 1 and 2 billion total shares circulating on the market. And I stand by it because this just shows you the malpractice and collusion that's taken place. It's simple. It's so simple. If it doesn't make sense, it probably is for a reason, right? The things in life are way simpler than we try and make them out to be. If we know that there are probably about 540 million shares that should be held as of right now, but you're still seeing, and by the way, like I said, this is more than the actual free flow that is circulating on the stock, but you're still seeing hundreds of millions in volume, it's because something's goofy. And I'll tell you what the reason is, right? It's naked shorting, it's failure to delivers, and it's malpractice and corruption by hedge funds. And the apes see this and they're stepping in and they're saying, this is enough, right? It's been decades and decades and decades of malpractice and corruption that led to this moment where essentially the apes waged war. We began the war for the market of the apes. And that's what this whole freaking story on the AMC squeeze is about. Now, you might be thinking to yourself, dude, why do I care about this war? Like, I don't want any piece of this if I'm not going to get gain out of it. And that's the great thing about this freaking whole battle is not only do you have something to gain in terms of writing a legacy, writing something in the history books, but the solution is this. If you buy and hold AMC stock, and of course, I'm not a financial advisor, you do what you want to do, but if you buy and hold AMC stock and this ends up winning, we end up winning, you make a substantial amount of money. You can make life-changing money, generational wealth. You can pay off your student loans. You can pay off your medical debt. You could buy your mom a house. You can buy your mom a car. You can do whatever you want because this is a once-in-a-lifetime opportunity, not just to stick it into the man, right? But when all is said and done and these policies and new rulings and filings are put into place, you're not going to have another opportunity like this. You're just not. So that's the freaking story of the AMC squeeze, guys. Not only writing a legacy, not only writing history, right? But you have the opportunity to make a substantial amount of money because guess what? When all those failure to delivers get cracked down on, when all the naked shorting gets cracked down on, when all the shares that are circulating in the market that shouldn't freaking exist get cracked down on, you get paid. The hedge funds, the market makers, their insurance policies, right? They got to take all that crud off the market. And guess who profits from it? The people who are likely holding those naked shares, the shares that should not exist. Because they sell it to us and we buy it, right? The truth is, the majority of the apes out there likely are holding the shares that should not exist. Is it our fault? Absolutely not. We held up on our end of the deal. Transactions are simple, right? Somebody offers a product and you offer money, right? We offer our money. They offered us a false product. They still have to hold up on their end of the deal and provide us a real product, right? Either that or pay us what we want to get paid for that product, the false product, right? So that's the freaking story of the AMC squeeze, guys. I know this is kind of long-winded, probably a little bit too passionate, but this is just something that freaking pisses me off. So if you know somebody that wants to know about the AMC squeeze, hopefully this wraps it up into a little bit of a nice rubber band ball for your freaking cat to play with. And that's what I've got for you guys. So thank you for watching, my friends, my family, my fellow Gorilla Gang, blah, blah, blah. Like and subscribe if you want. If not, that's cool too. Catch you on the next one. Much love and peace.